All right, so the weakness in the market internals that we talked about held true. We saw weakness today. I'm going to be showing you some pretty bearish looking charts that can be followed up with some significant opportunities. We got a lot to cover today, so pay close attention because I'm going to be doing some long-term charts, and then also I'm going to scope in closer to more of the 30-minute time frames too as well. You're watching the Daily Stock Market Brief. My name is Michael Silva. Let's go ahead and get into today's show. All right, welcome back. Now, before I hop into this specific chart, which we've all seen before, unless if you're new here, welcome to the show. I do these Monday through Friday, 5 days a week. We use technical analysis and intermarket analysis to get a good idea as to where the market might be going next. Now, before I walk through this, one, housekeeping. I get a lot of spam comments, okay? Some of them look like me. Ignore those or report them because I don't want anybody to get scammed. It looks like me, like I said, it's the same profile picture, but it is not me, so ignore those. Second, I started my live trading videos. They're not me hitting a live button where you can interact with me live. I'm a little hesitant to do that as of right now, just because moving money back and forth and being live, I just... Maybe I'll do it on a smaller scale before I start moving my equity in and out, but I just don't want anything to happen during a live trade, as entertaining as that might be, but for my internet to somehow get clogged up or whatever be the case. But I do record them live, so I screen record and talk through the process of that. So I'm trying to get back in the realm of that, and maybe eventually I'll be doing those actually live streams. That's all I got today. That's all I got. That's all I got to talk about there. Let's go into the chart. So first off, we talked about internal weakness taking place, and we saw weakness occur today. All right, so March, it's a bunch of chop. We're seeing that. However, this could be setting itself up for somewhat of a rug pull, okay? Things are looking pretty bearish. We did get overextended to the downside today, so we could see some bump ups. It just really depends on what happens overnight. But this could be setting itself up for a April to mid-April rally, just like from looking at the seasonality perspective dating back a 20-year range. Typically you get chop in March and then big run-ups in April. So we got to be prepared for that. Now, when I look at the dashboard, this is all the indices right here. You can see 308 points down. Just take a look here at the biggest hit. You can see right here down 3.5%. That's small caps. Now, I've been saying small caps is not something that I really go long because it just seems like there's more risk going long than there is to not necessarily short, but it's just more risk to the upside than there was to the downside. Now, just remember that because there's a reason for this, and I want to point that out today in today's show and how it could lead to more weakness if things don't change. From here, these are the 11 sectors in the S&P 500. We got utilities leading the way. That's a risk-off move. So when you see utilities taking charge, it's somewhat showing a rotation, or not necessarily a full-blown rotation because we're just looking at a day here, but it does show that people were moving their assets into more lower beta, safer type stocks. And then we have financials, energy, industrials, materials down at the bottom. So we've been seeing energy get hit hard and financials holding there at the bottom. So I want you to pay close attention here to this financial portion. All right, we're going to look at the BKX. Stay with me here, okay? So we've called this many times, this red resistance, the red zone. If you're new here, you haven't heard me say that, but every time we get into the quote-unquote red zone, some crazy stuff happens. So right here, when we got in there, that was the 2008 financial crisis. Right here, we started tapering, right? And then when we got back up to this level, we fell right back down, right? So I think that was during the whole repo and then QT taking place. And then we started recovering. When we got up here, we had the pandemic. Now, we were a solid green candle at this point. So this is the monthly time frame, a solid big green candle. But as you can see now, we're starting to see weakness. We have a long upper wick. This is creating what many people call a reversal type candle. Now the month isn't over, so this can change. And even if it closes like this, a big inverted hammer, shooting star type candle, that doesn't mean anything without continuation or follow through, confirmation to the downside. Like we've seen it here, and we never really got confirmation, but it's something that I wanted to call out. Now, remember, I said financials were getting beat up these last few trading days, or 5 trading days or so, around there. from this perspective, I'm going to be looking at rate curves. So these are, yield curves. So this is a longer term picture frame, say monthly time frame. I've shown this a few times. And every time we get this 10-2 yield curve above 1.0, you can see that we've seen some pretty significant sell-offs. And we're right here at a pretty interesting area of resistance. Now it's kind of acting as support, but we're kind of just getting caught up there on this negative divergence. When I take another yield curve into consideration, the 10-3 month, you can see when it reaches right around 1.5, also you get those sell-offs too, and we're right now reaching into that 1.5 range too. So shaky ground as we're trying to figure out what the Fed's going to do with these increased yields, what they're going to do to, you know, reduce the unemployment level. What is the unemployment level right now? It's hard to even say, because sometimes they say that it's, you know, higher than what it actually is being reported, because certain people that have been outside of a job or not looking for a job aren't incorporated in that number. Now, when I bring up this, you can see here we saw today on the yields, we saw the 10-year go down and the 30-year go down, okay? So this is important to note. We have financials there at the bottom, or somewhere near the bottom, taking a pretty big hit. We can see this area of resistance. We see these curves starting to steepen here. We don't know if that's going to continue to hold or not. And then we see them down on the day. All right, so let's also look at the TLH. I promise you it's all coming to a conclusion here as to why this is important. So we've been saying this little area in here looks like a short-term bottom, and we're starting to see that bounce. We saw the bullish divergence here on the TLH, the 10 and 20-year Treasury bond ETF, and now we're starting to see some strength. Is that temporary? It could be very well temporary, where yields continue to rise, but it's still worth noting that the bullish divergence, and now we're seeing the strength, which brings the yields down. During that process, we look at the dollar. Dollar is doing a bull flag right here, and we're starting to break out. We're above 92 on the close. We saw pressure to the downsides in the markets. That is something worth considering. We're still in a bearish trend, but this right now is a bullish trade. So if we can hold up here a couple of days, will we get continued strength in the dollar? And will that put continued pressure on the equity markets? Well, this is why this is important, seeing strength in the dollar and weakness in yields. That right there is a recipe for poor financials in the sector. And when you look at the IWM, remember I said at the beginning, IWM, Coco, hey, Coco's barking. Small caps right here took the biggest hit today, 3.49%. Now, what makes up the small caps? Well, if you look at the sectors in the IWM holdings, financials is one of the biggest weights at 20.67% for its sector allocation. So if you see a dollar that's strengthening on top of that with the yields falling, that right there is a recipe for disaster for small caps. For example, the IWM. And if financials get hit down to the downside, you need to pay very close attention to the KRE or the BKX, the KBW Bank Index, which is the largest 24 institutions, because if we're running into these areas of resistance and then all of a sudden we see weakness, which has not been confirmed yet, but that's going to put extreme pressure on these small caps. So I wanted to call that out and make everyone aware. Now, if this continues happening, what we can see here take place, like for example, the IWM, that negative divergence on the weekly time frame, that we can very well see a breakdown of this technical structure, which is a rising wedge. We see right here the price percent oscillator just crossed over to bearish. Now the week isn't over yet, but this is not a good sign. And if we break down, we'd be looking at this as a target area. Here on the daily time frame, it's worth noting that we just closed below the 50 period moving average, and we're still seeing continued weakness here in the price percent oscillator. However, when you look at the 30-minute time frame, it's worth noting that we are very, very oversold here with a bullish, it's a bullish pattern falling wedge. So there's a couple of things to note here. And I posted this on Twitter. If you don't follow me there, you can follow me there. Bullish, very extreme oversold with a falling wedge bullish type pattern. You can see some pretty significant bounces, but that doesn't mean it's just a bounce and then it, flies to all-time highs. It can, but that's not always the case. So it's just worth noting, I don't like shorting things when they're this oversold. So what you want to do in these situations is wait for either one, for this RSI to get back into this positive territory, and then look for weakness on the price action to potentially short into it. But you don't want to take a short position at an area where it's really primed for a bounce. You can see if you just look to the left of the chart, it's also running into these areas of support. Now, there's also something else to note. You can have significant breakdowns when the RSI is extremely oversold. So that's also worth noting. As it stands right now, though, we're seeing quite a few charts that have been oversold, so it's very likely to see a bounce. Now, it depends on what happens overnight. If we get some huge gap up overnight, that to me would be an opportunity to sell into that rip come the morning time. But we don't know yet, so we have to wait for that to take place. If we get a big gap down, that could be actually a bullish thing that can take place because of the fact we're already very oversold. So a big gap down, we might see some strength being bought in to come back up and fill a gap. So be very tactical in this environment. It's going to be a very confusing couple of days or rest of the week as we're seeing these weakness in these bigger charts, but we're seeing some bullish oversold readings that are presenting an opportunity for a bounce coming into tomorrow. So let's pay attention to that. Now, let's get into the Dow Jones on the daily time frame. I want to call out here, which we haven't really quite discussed yet, but it's something that I've been keeping an eye on. We have a potential broadening, ascending wedge pattern, and this could very well break down. And if this does break down, and this is what they look like if they break down, you'd have a price objective for near the opening. That would come in to fill this gap here at around 28,500 to 28,750. Now, this could also be a continuation type pattern. It's not a guaranteed, drop and break down. We're still in bullish context, all right? The 20 sloping up, the 50 sloping up, the 200 sloping up, but it's worth noting that the possibility for a breakdown might occur. So if we see continued weakness down here, you might see a bounce and then potentially break down if that's the case. This is a dinosaur pattern too. Look at it, a little leggy, little long neck, and then you got this too. So there's the possibility for this, so I needed to call it out and make sure that you guys are aware of that. Now on continuations, you might see it come down a little bit into a previous area of resistance, like right in this zone, 31,750, right about the 50 period, and then you can see it bounce and move up higher. That would fit the script for the April rally or mid-April rally. However, the price percent oscillator is looking like it's going to do a bearish crossover soon. This does look like a bull flag from a bullish perspective. I don't necessarily like how the price percent oscillator is about to cross over to the downside. So to me, that's not the most bullish looking trade setup. However, it's going to be interesting to see how this one does play out. Now, from a 30-minute perspective, we talked about this bear flag channel yesterday. We got the breakdown today, so this area did not hold as support. It would have made for a good risk versus reward trade, but you would have got stopped out fairly quickly. And then we broke down. So now I have a little price target here of 319 to 321, this kind of zone. That's previously where we saw some chop. Now we are oversold, so it's very likely to get some sort of bounce up to around 325 to 326 and then get rejected from those levels. Now anything could happen, right? The 200 is still sloping up here, so we need to see it crack below that first. But remember, sometimes you get movements to the downside and then you get back tests. So keep an eye for a back test or even a little bit higher. I still am going to hold this upper channel right here at 328 for an area of resistance, and that's going to be a key level to keep an eye on. Now, I want to get into the VIX. The VIX, we had a falling wedge and we broke out of it. I redrew the VIX to be, once again, another falling wedge type pattern. So let's keep an eye. Now, a lower Bollinger Band keeps on moving down. So it says to me that, hey, we still have the opportunity to come fill this gap. And a low end of this range is 1691. So we got to keep an eye out for that and be very careful for a break above this wedge, because that could result in a big spike in volatility, and that could bring obviously market down. Now we're already, we didn't get much volatility. We had a little, up 7% on the VIX today, and we're still relatively high. So the structure here on the VIX, both on the VIX futures actually and the VIX cash market here on this chart, it's still at this elevated level and at an area of support. So you need to be careful in this environment. It's just there's no clear direction as of right now, other than it's at an area of support, so it's setting itself up in this bullish pattern to potentially break out here soon, which could put a lot of pressure to the downside in the markets. Now let's look at the daily time frame. This could be a bull flag, but note also the bearish crossover taking place here. Not the greatest sign. However, the context, right? 20 is sloping up, 50 is sloping up, 200 sloping up. That's a good sign for the bulls. To make a decisive movement to the downside, the bears really need to get decisively through 3,900, okay? That level of resistance / support has been holding. So if we can make a decisive move through that, the bears can maybe get some more steam to push us lower to where the year opened or this trend line. So that we need to keep a close eye on too as well. From the 30-minute time frame, we talked about this bear flag. Well, guess what? The bear flag broke down. So awesome if you were paying attention to that. Good stuff. I was shorting the market today, and did decent for the most part. Made $80, 80 or $100, I can't remember. This now, also I want to call out, could very well potentially be a head and shoulders, but it's going to take a lot of steam from the bears to decisively move through 3,900. And if that is the case, we can easily come down to fill this gap right around 381 and potentially lower. So we're going to have to monitor this. This area was obviously an area of resistance, and then we had a gap over it, creating the left shoulder, then the head. This is a right shoulder. And now we're kind of breaking through the neckline as of right now. So let's pay very close attention to this. If we get decisive moves down, potentially fill this gap, bounce back up to back test, and then head lower is always an option. But if we get a decisive couple closes below that, then let's look for a back test and then an opportunity to potentially short into that. However, like I said, we're moving into this oversold territory here, so be very mindful of that, because oversold territories can lead to some pretty significant bounces. Now let's look at the Qs on the 30-minute time frame. We had a gap up and we closed midway through this previous day's candle. That's some dark cloud coverage, not the greatest sign. The 50 period held as a level of resistance, and this neckline still has not been phased, not tested, not anything. So we need a decisive rip above 324 to give us confirmation that we might have some more upwards movement. As it stands right now, we have a couple gaps below us, and it looks like they're on their way to go get filled. It's hard to say. I don't see a really solid trade setup at this particular point in time in the queue, so I'm going to just be keeping a close eye on it. From a Bitcoin perspective, somebody from my Twitter did note that on the 4-hour time frame, it looks like a cup and handle. I want to talk to that. So the cup, the handle, so that could very well be true, and plus it's a very bullish structure, 50, 200, sloping up. However, I called it a descending triangle. It's the same either way you look at it as far as a breakout perspective. If we break out of this resistance, whether it be a cup and handle or a descending wedge, you're going to have the same area to look for a breakout. If we get a break out of this area of resistance, that can lead to obviously higher highs and continued move. But right now, the bears are making progress to the downside, and the bulls are trying to hold up this 52,500 level right around the 50-period moving average. So if that gives way, there could be some increased selling take place. So you got to be very mindful of that. It's not a position that I'd go along with right now. I'd want some sort of confirmation. Now let's look at gold and silver. Gold, weakness today, down $13. This could be rolling itself over and being a dead cat bounce. It's important for this to hold up at these levels, but right now we're seeing some weakness. You see the histogram on the PPO starting to lose some steam there too as well. So gold's just been getting hammered obviously since August. We talked about silver yesterday, looking very weak, breaking down through this bear pennant. Down 2% on the day, so a big hit to silver. The easy target would be right around the 200-period moving average, but if this is a bear pennant and it is a full breakdown, you can take the length of the pole and measure it down, and it would actually come down into around 22 to 23, that area, which happens to be this area that used to be resistance and now could be a potential area of support. So if that is a full breakdown, start looking for silver down in this range, and that could be a good opportunity to potentially buy. All right, so just to wrap up my thoughts here, I went over some bullish and bearish, really just bearish charts because I see a lot of bearish price action, and we discussed what the yields do, and with the rising dollar, how that can put pressure on equities, and especially things like small caps, the IWM, because financials make up a big portion, 20% of its holdings in that sector. We talked about this, right? The BKX, this is in the red zone, but we need confirmation, and we need the month to close to really kind of gauge where this can potentially be, because the price percent oscillator does look pretty bullish here. So to me, it's saying this. It looks like we're getting a setup for a potential rug pull going into April. So we need to be prepared. If that does take place, April to mid-April, you can see some pretty big rallies, and that could be a very good sign. So we need to be prepared for that. We might be forced to be scared if we do get some crazy sell-off and then everyone's talking the end of the world, and then they're not prepared because they don't know that April brings some big rips. Doesn't necessarily mean it's going to happen for sure, obviously. So we need to be very tactful in this approach and see kind of how the week closes when we do the weekly recap, and also how the month closes. We have a quarterly close in a few days here. We have a monthly close and a weekly close. So we have just a lot of stuff going on, everybody. So be careful out there. I will see you on the next episode.